please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Amit Dalal, ED at Tata Investment Corporation, is now joining in. Amit, good to have you on the show. Thanks for joining in. We're in interesting times. The market has rallied quite a bit. And we're seeing some participation and interest come back in the mid-caps as well. But then there are these macro headlines which don't always add up right. Crude oil prices, the rupee. How would you sum up where we stand today in the market and whether you think bulls have a bigger and better case from here on?
So technically, I think the market is full of confidence. Allocations to equities remains high, domestically at least. In India, there is more and more confidence that you have to perhaps remain invested in equities over the long term, and therefore you don't see any fall in SIPs. And also the insurance companies are becoming larger, and therefore their allocations to equities remains high. Globally, I think there are mixed views and mixed trends which are coming from various parts. Interest rates are rising, and therefore there are cues that perhaps one should reduce allocations, but still equity markets in the United States keep ruling on an upward trend. So I think the global markets are perhaps more mixed in their approach to equity allocations. But in India, I think equity allocations remain on a positive note.
Amit, and this is happening at a time when FIIs continue to be sellers, right? So how does that... you look at, and people have been saying that
yes,
money is coming from locals, but that tap is also thinning out a little bit, isn't it? I mean, last month, equity schemes got about 10,000 crores. At the peak, it was almost about 20,000 crores or so. So what do you reckon happens in the immediate term? Do we continue to move higher? Or do you think the next thing we see before any substantial move on the upside is actually a correction?
If in terms of the money flow, when it becomes less, what you really see is a narrower market. So if you've seen in the last 4 months since April, there has been a very narrow outperformance of stocks within the indices and a larger secular consolidation taking place, and that's why the mid caps and small caps had gone down, and of course there were some regulatory issues which led to those sell-offs also. I do think that the markets are very expensively priced right now, and therefore a correction should come forth, given both the fact that we are going into an election season in the next quarter, and perhaps you will see 2 rate hikes coming from the United States by December of this year, as promised by the Fed. Given that background and the fact that we have a market which is almost 25 times earnings and a PEG of 1.5, I do think we are in a higher risk zone than one would like to be.
Amit, the biggest talking point right now on the street is whether we're really turning the page with respect to corporate banks, biggest lenders like ICICI, SBI. Now, here's the thing. These stocks have moved up around 30% from their lows. What do you think is being baked in right now? What sort of a recovery are we talking about? And would you say that this current rally has more sort of momentum? Is this the real deal?
So again, you know, on the table we have to differentiate between the private sector banks and the public sector banks, and therefore what is happening in HDFC Bank is perhaps very different in character than what's happening in State Bank of India. HDFC Bank continues its momentum of increasing its book without having the pain of NPAs, and it continues to do both individual lending and corporate lending, and individual lending part of its portfolio is growing equally as it did in the past. And so its mix is giving it a higher ROE than perhaps the public sector banks. Now, the public sector banks have gone up 30% in the case of State Bank, mainly because there is a statement made by the banks that we are reaching perhaps the peak of the NPS deterioration cycle. And it seems evident that we are. The recognitions have been very strong and regulatorily pushed to a level where I think the books now look fairly well recognized in terms of the NPAs. The economy is improving on the ground. the markets and the demand for products have now got stabilized after GST getting into the system in a very, very seamless manner. So I think you have a case to be made that these banks will not see higher contingencies in the next couple of quarters. Contingency provisions, sorry.
Okay. Coming to other stuff that you're saying maybe worse is behind for PSU banks, not necessarily that you yourself are buying those stocks, but the other sectors which you are actually positive on is metals and IT. Amit, if you could just explain the thesis behind those two. And in metals, specifically steel.
So here are the things. When I say that we remain positive, it's because we are invested in these sectors, not necessarily we are doing anything incremental in those companies. I think in terms of IT, they have had beneficiaries. They have, of two things. One is, of course, the currency has gone completely in their favor. But the second is, if you take a company like TCS or even now Infosys, they're talking of reorganizing a skill set of such a huge population of people working for them in a manner in which makes them competitive in the global IT space. And it's, the proof of the pudding is available every quarter that we are seeing the results. So that is not going to be ignored by the market, and that is something that's going to always give you market cap appreciation as time goes. And to be honest, I mean, the returns that have come in many of the IT companies in the last 1 year have been just phenomenal. Even the mid-cap IT. Take L&T, it floated two companies one after the other, and those share prices are almost 60 to 80% higher than what their IPO prices were when they were listed. And that's very rewarding to the shareholders of those companies. And very, very creditable to the management of Larsen Toubro and its group. I do believe that that is both a market-related situation and a core to the companies themselves.
And steel, Amit, what do you see there? Because many believe that prices are steel prices continue to strengthen in a.
So that's of course
in a off season. But how far will these sustain? Will these price hikes and prices at these levels sustain?
So it's a China-driven story, right? We all know this in terms of graphite or in terms of steel. It's a China-driven story where Chinese capacities have been closed because of pollution problems or because they are reorganizing. And those capacities do not have any substitution taking place in China. So you don't have China exporting anymore. And therefore, the global markets of steel remain strong. And there does not seem to be any let-up in that argument, or there does not seem to be any reason to believe that that's going to change in the next quarter or two. So I think steel manufacturers in India will continue to benefit. Also, there has been a reorganization of capacities in India in terms of the NCLT. So there has going to be some benefits coming from higher production of steel in India too.